Hello all, welcome to our value investing channel. Today I have come up with one of my personal portfolio holding company, which is Tata Chemicals. This is no stock recommendation but just a business analysis on what Tata Chemicals really does. If you are also holding Tata Chemicals, you would know that last 1 year there has been no appreciation in the stock and it is almost flat. In fact, it may be negative as well on past 1 year return if you see. But as my holdings are much beyond that, I have been holding since a time now, so I am still on a very good amount of profit, but that's a different case. I would again project here, the returns are higher if you invest for a very long time. Now let's get into the business analysis. So Tata Chemicals Limited was incorporated in 1939, which is basically a Tata Sons group of company which manufactures and exports basic chemistry and specialty products. Don't worry, I'll simplify that further. The company has a strong market share in the global soda ash industry with presence in India, North America, Europe and Africa as well. Having well diversified product profile divided into basic chemistry products and specialty chemicals as I told. Tata Chemicals, if you see, is the third largest soda ash producer globally with over 2/3 of its capacity being natural soda ash, translating into cost-effective production. More than 50% of soda ash in the world is used for glass manufacturing. So if you see solar panels, which is gaining traction these days, so they are having this glass cover. This solar panel is also pushing the demand for glass. Hence, demand for soda ash. So soda ash is also used in detergents. Because of the high production of soda ash by China, there has been a huge margin pressure on soda ash sold by Tata Chemical as well. Because they are dumping, Chinese is dumping products here, which is creating margin on Indian companies like Tata Chemicals. Also, Tata Chemicals is the 5th largest producer of sodium bicarbonate in the world and one of the leading agri-services and crop protection chemical companies in India. So, agri-services includes its subsidiary Rallis India as well. Sodium bicarbonate, also called baking soda, finds its use in bakery, biscuits and pharma sector as well. So as I told, there are two business segments for Tata Chemicals. The basic chemistry segment includes soda ash, soda bicarbonate, cement, salt, marine chemicals, etc. And specialty chemistry segment includes agro sciences, nutritional sciences and material sciences related products. So as I told, there are production units in India obviously producing soda ash, bicarbonate and salt. And in US, they have another soda ash production facility having around 2.54 lakh metric tons per annum production. Then they have in UK both soda ash and bicarbonate, also salt. So soda ash is around 4 lakh metric tons per annum. Bicarbonate is around 1.3 lakh metric tons per annum and salt is around 4.3 lakh metric tons per annum. And another facility they have in Kenya, South Africa for soda ash, which is having 3.5 metric tons per annum production capacity. So from all these 4 places, the manufacturing and production of this chemical happens and globally it is been supplied. If you see sodium bicarbonate, also called as bicarbonate, another name is baking soda, is produced from soda ash only. And if you see the EBITDA margin of sodium bicarbonate is around 1.5 times that of soda ash. So if you sell more of sodium bicarbonate compared to soda ash, it will be more profitable, at least 50% more profitable. So sodium bicarbonate baking soda is basically, as I told, used in food, pharma, even for flue gas treatment from power plants as well for emission control. So that is also gaining momentum these days. Now the current revenue split is 20% from specialty products and 80% from basic chemistry products. So specialty products, they want to ramp up. Their futuristic plan is to ramp up from 20% revenue split to 50% for specialty products and reducing the basic chemistry products to 50%, considering the higher margins and profitability for the specialty products. If you see in Gujarat area, majority of the people are now ramping up their activity into specialty chemicals because they are sold at a premium. So Tata Chemicals 2 years back had a target of splitting this revenue 50-50. So they have been working on various capex plans for ramping up this facility and achieving this goal. So in that specialty chemical 50% breakup, they wanted 5% material sciences, 10% energy sciences, 10% nutrition sciences and 25% agro sciences, which include Rallis India subsidiary. Talking about material science, which is mainly silica, a substitute to carbon black. Why this substitute is required and vital is because carbon black is originally made from coal, which is basically a derivative of coal, which is not emission friendly and is polluting the nature. But if you see, silica is made from sodium silicate plus rice husk and sulfuric acid. So this is relatively less polluting. So Tata Chemical is producing this silica and trying to ramp up the capacity as well. So sodium silicate, end of the day, which is used for deriving silica, as I told, along with rice husk and sulfuric acid. This sodium silicate is made from soda ash. So again, soda ash is produced by Tata Chemical. So again, a derivative from soda ash is again silica, which they are manufacturing. Again, value adding to the material sciences division. Tata Chemical is involved in many R&D activities and initiatives in energy sector and have collaborated with ISRO and other reputed organizations aimed at development of battery material cell design and manufacturing technologies. They have lithium-ion battery recycling plant for recovering with almost 99% of purity of spent lithium ions with lithium, cobalt, nickel and manganese. So all these metals are recovered from the used battery which we are throwing away, and company eyes at increasing the capacity of this plant as well for handling higher capacities of recycling. In between, they had a plan of starting the lithium ion cell division as well, but this is now not handled by Tata Chemicals. They have dropped that idea. So though they are not into direct battery manufacturing plant, it supports Tata Motors with essential chemicals for its EV wing. So please don't confuse lithium ion battery plant to be set up by Tata Chemicals, but it is actually set up by Tata Sons under its subsidiary Agratas Energy Storage Solutions Private Limited. So Agratas is not a subsidiary of Tata Chemicals but a subsidiary of Tata Sons. But however, it is interesting to note that Tata Chemicals holds around 2% of Tata Sons stakes. So this was earlier also I had mentioned, and Tata Sons was to list. Then if it lists, almost 20,000 crore will be added to Tata Chemicals book value. But then the Tata Sons has declined to do that by clearing their debts, outstanding debts, because it was claimed by SEBI that Tata Sons is a NBFC because he had financed many subsidiaries of Tata Sons. But as they cleared majority of the debt, now the listing of Tata Sons is under question. That's a totally different subject though. So if you see under this Agratas Energy, Tata Sons is planning for around 13,000 crore capex for a plant at Sanand, Gujarat for a 20 gigawatt hour lithium ion cell manufacturing facility. Nothing to do with Tata Chemicals as of now. But surely under Tata Sons MD, Mr. Chandrasekharan, it is very clear that there will be synergy between all these companies, and Tata Chemicals surely will participate in one way or the other in this lithium ion manufacturing facility, either by supply of chemicals or recycled materials or any other way. That's for sure. Now coming into valuations, the PE valuations are never premium and is always low due to major revenue from basic chemicals business of soda ash, which is actually commoditized, and pricing fluctuates based on demand and supply with huge pressure from China dumping their chemicals here. Tata Chemicals has production units in Gujarat, Andhra Pradesh, Tamil Nadu and Maharashtra with an installed soda ash capacity of 1.1 million tons per annum, sodium bicarbonate capacity of around 0.15 million ton per annum and salt capacity of 1.6 million tons per annum. The US, UK and Kenyan units, what is the capacity and what are their products, already we have discussed earlier. Now geographically, if you see, India contributes around 27% of its revenue, the US contributes 34% and 15% comes from UK, just 4% from Kenya and the balance 20% from its subsidiary Rallis India. So as I told, soda ash is needed to produce lithium carbonate, crucial for lithium ion and other batteries. Surely Tata Chemicals will participate in the journey of EV. Now if you see, everybody is talking about lithium ion battery. Tata Chemical has one another hidden point which I would like to discuss here. Not much discussed by others. The company can easily pivot to manufacturing raw material required for sodium ion batteries, which is a alternative to lithium ion battery. Again can be used in EV. But as of current information, Tata Chemicals is not actively pursuing sodium ion battery production, primarily because of the technology's lower energy density compared to lithium ion batteries, making it less suitable for applications like electric vehicles where high density storage is crucial. While they do have the necessary raw materials like soda ash, the current focus seems to be on developing lithium ion battery technology for battery performance and market demand. As I told, they have tied up with various organizations including ISRO for researching and developing various products, especially related to EV. So soon they may come up with some innovative product, maybe sodium ion battery as well. Key points about sodium ion batteries and why Tata Chemicals might not prioritize them. Let me point it out. First thing, as we discussed, low energy density. So sodium ion batteries store significantly less energy per unit weight compared to lithium ion batteries, resulting in shorter driving ranges for electric vehicles, which these days customer demand more driving ranges, so it's a challenge. Second thing, technology development stage. The sodium ion battery technology is still in its early stages, which challenges in optimizing performance and lifespan. Third one is market focus on lithium ion. The current market for electric vehicles primarily relies on lithium ion batteries, making it a more established and lucrative space for Tata Chemicals to invest in. However, potential benefits for sodium ion batteries that could incentivize future development includes: first is cost effective. Sodium is more abundant and potentially cheaper than lithium, making sodium ion batteries a more affordable option for certain applications. Second is grid energy storage. Due to their longer lifespan and good stability, sodium ion batteries could be suitable for stationary energy applications, though currently not designed for mobile EV vehicles. Coming to the financials, Tata Chemicals reported a 5.2% decline in its consolidated revenue for H1 FY25. EBITDA also fell almost 35.9% on the back of deteriorating EBITDA margins, which comes at a 15.3% for H1 FY25 versus 22.7% for H1 FY24. Going ahead, the management says that the demand scenario remains balanced, thereby anticipating steady operations in second half of FY25, which is the coming half of this year, following disruptions in the first half. So, if you see, the stock has been poorly performing since past 1 year, but as I always say, as a value investor, patience is the key, as the company fundamentals and management is strong and efficient. So this is never a stock recommendation. Put this in your watch list. Watch this company. As per me, the business is double strong, management is super strong, healthy fundamentals. The business potential going forward is very good, added by the strong ethics by the management, strong management capabilities and efficiency, including Tata Chemicals MD Mugundan. The company can pivot to various other chemicals which can value add to the stock price as well. See you in next video. Till then, happy investing.